Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1116A, and today's date is November 1st, 2016, and the title of the episode is The Monetary System is About to Transition, and it's going to cause havoc on the streets. Now, before I get started, I just want to make an announcement. The interview with Jim Willie has been uploaded to the X22 Report Spotlight YouTube channel. So you can go over to YouTube, type in X22 Report Spotlight, should bring you right to the video, or you can come over to the x22report.com site, scroll down a little bit, you'll see the video on the right-hand side, or you can go to newssentinel.com, same thing, scroll down a little bit, look over to your right, you'll see the video there, and you can play it right there. Let's get into the economic collapse financial news. Now, as we get closer and closer to the elections, we're starting to see volatility in the market. Actually, the market is down today, gold is up, and we can see that the underlying economic indicators, they're continually deteriorating. It's not improving. And those people who believe that all of a sudden this is going to turn around, well, I'm sorry to say it isn't. All of a sudden, stores are not going to start opening up all over the place, hiring people. We're not going to see manufacturing just turn around and all of a sudden we're a manufacturing powerhouse. All those people who are getting laid off now from companies, they're not just going to all of a sudden just find jobs and start working again. Remember, this has taken years to create what we have today, and that is a failing economy. They didn't do it overnight. And if you were paying attention, you realized over time, especially as we've been tracking this, that it has gotten worse and worse since the beginning of when we started tracking this. And if you go further back, you can see how bad it has gotten. Now, of course, many people do believe that the economy is doing well, everything is fine. But we can see right now that that is furthest from the truth. We are seeing more companies lay off now than any other time except for the Great Recession or maybe the Great Depression of 1929. But more and more corporations are deciding, you know something, we need to cut expenses. So let's let go some people. And what's very interesting about this, we saw this occur right before the market came down in 2008, and we're seeing the same thing happen once again. We see Reuters, they're going to be laying off about 2,000 people. They're looking to restructure across 39 countries and about 150 locations. It's going to affect the financial and risk business and the enterprise areas of their business. We see GM right now, their sales have dropped by 1.7%, and they've been offering incredible discounts to try to boost their sales. And what has been happening is that auto sales are continually declining, and they've declined between 6 and 8%. And even with these huge consumer discounts, they failed to prevent a fall off from last year's record high. And we can see right now sales are much worse than they were last October, even with the consumer discounts. This should tell everyone something. This tells us that the situation here, the economy, it is not improving. It's actually getting worse, because when we look to a year ago, we see things have gotten worse. Actually, if we look at trucking companies right now, we realize that this is another problem. We're seeing a collapse of the Class 8 truck orders. For the month of September, net Class 8 orders were down about 16% year on year. And we see right now that these net orders, they're the lowest since January of 2011, with year-on-year changes now in the negative territory for 19 consecutive months. And what they're saying is that, there's overcapacity. This is what has driven the pricing down. They don't need the trucks. And the reason for this is because there's weak consumer good imports. Most consumer goods are imported. They need to be shipped around the country. And guess what? Since the consumers aren't demanding the goods, nothing needs to be moved around. And this is why we see retail contracting, manufacturing contracting. This is why we see trucks declining, rail traffic declining. I mean, it all starts to make sense when you start to put everything together. And what the corporate media and what the government and the central bank is telling us, that doesn't seem so realistic anymore. Because when we look at what's going on here, we see things are rapidly deteriorating. When we look at the real estate market, not just housing, but we look at renting, we see things are dramatically changing right now. Demand is drying up in the priciest markets. Among the top 10 rental markets, we are seeing declines in these markets, San Francisco, New York, and the trend is continuing from last month. Half of the 20 priciest saw falling rents, including cities like San Diego, Miami, Honolulu. The market for two-bedroom apartments seems to be slowing down even faster. Prices have fallen by 60% of rental markets. The last time rents declined year over year was back in April of 2010. Now, this is just another indicator letting us know that things are rapidly deteriorating very, very quickly. And what's happening across the nation, not just in New York, but we're looking in the southern states, Florida, Texas, California, the Midwest. We see that these people who are renting out these apartments, houses, or whatever they're renting, we see that they are now giving incentives like, come in and we'll give you the first month free. Come in, we'll give you 2 months free. So not just the housing market, but the rental market is also getting hit right now. And what we're starting to see is that everything is contracting at the same time. This is a perfect storm where this system is going to rip itself apart and there's nothing they can do to stop it. Yes, they can create currency out of thin air, but it won't stop the underlying economic sectors from contracting. They can't do it. They can't force people to go spend. They can't force people to get jobs that don't exist. It just will not work. We see U.S. construction spending. Well, this has contracted year on year for the first time since 2011. And we're seeing that U.S. construction spending declined for 2 consecutive months, sliding 0.4% in October. Now, they thought there was going to be a 0.5% rise. But what we're seeing right now is that year over year, it is declined by 0.2%. And this is the first time since 2011. Again, this is another indicator letting us know that we are headed towards major problems. Now, the last time U.S. construction spending declined on an annual basis, the economy entered a recession. And when we look at this over time, and we go back prior to 2008, we see construction spending declining in the years of 2005 going into 2006, going into 2007, and then boom, we went below zero when we hit 2008. And we're seeing the same pattern right now. I mean, if we go back to 2014 into 15, then go into 2016, we're seeing a downward trend. I mean, we're at negative 0.2 right now. We're heading in the same direction. And since 2011 or so, we've been bouncing around between 5, 15, around that area. And it just started to suddenly drop come 2015 going into 2016. So we can see the situation is not improving whatsoever. It is getting worse. And we're seeing more and more indicators. And we mentioned about the bond bubble where it is bursting. And we're seeing the global bonds, well, they are collapsing. The German 10-year Bund has seen yield spikes out of their downtrend, as have Japan's 10-year government bonds. Long-term U.S. Treasuries have taken out their trend line, as have junk bonds. And the bond market right now is flashing danger. Danger. We see the bond bubble is now well over $100 trillion. And to top off that whole thing, there's another $555 trillion in derivatives trading based on bond prices. So when this comes down, it's going to be a complete disaster. Now, what we're seeing is this entire system ripping itself apart. And we know the central bankers, they've been planning a completely new system. It's been in the works for quite a while. We're going to have a whole new currency. The existing dollar will be devalued. Now, many people say it's going to be the SDR. Other people say it's going to be something completely different. They're talking about cryptocurrency. But we can see at this point that those individuals that are holding US dollars, we know they are toxic. We know they're going to be devalued. And from what Jim Welly is saying, from what Jim Rickards is saying, these dollars are going to be devalued quite a bit. And anyone holding them, they're going to lose. You're going to lose your wealth. And this is why you need to prepare accordingly for what is about to happen. Now think about this. As this entire system rips itself apart, they can't stop it. We have a financial crisis. We know the petrodollar is completely doomed. And they start to do this transition. You know it's not a one-off easy thing. We made a transition in the beginning of this fiat system in 1971, coming off the gold standard. Now we're coming off the fiat system where we have so much debt, where we have so many problems, where the rest of the world is no longer going to accept this dollar as a reserve currency. So we're at the opposite end right now. That is what we are watching. And we know back in time, going back to 1971, it was very difficult to get products, to get fuel, and we saw massive inflation. And the only positive during that period was wages increased at the same time. Now we have wages going in the opposite direction. And we have wages declining while inflation is going to be moving up. And this is going to be a disaster in the making. And we can see right now that people will riot. People are going to be very upset. And we know during this period of time, they're going to have to close the banks because people are going to try to get their currency out and trade it in for maybe gold, silver, or anything else while this transition is occurring. And this is why everyone needs to be prepared and ready for what is coming. Because what is coming is going to hurt a lot more than it did in 2008, where people lost their pensions, people lost the value in their homes, people lost their stock portfolios. This time, we're going to a brand new, entirely new system. We'll be transitioned into it whether we like it or not, because it's already in the works. And everyone needs to be prepared for what is about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.